Hi, my name is Mark and I teach economics. The purpose of this video is to talk about free banking, also free money. It sounds pretty good, free money, free banking, anytime you put a word free in front of something, but it really is pretty good. It is an alternative to the government control of money, the government monopolistic control through the government banking system of the Federal Reserve. We had this system, 1836, the charter, the second bank of the United States, expired. And from 1837 to 1863, we had something called free money, free banking system. And after that, subsequently, all the way till 1914, we had a quasi-free banking system, free money. And that was our Gilded Age. The world didn't fall apart. Most of humanity existed without the Federal Reserve. And we just assume the Federal Reserve exists and we have this money supply that this is the way it has to be. Not necessarily. Canada, before World War I, had free banking. Scotland certainly had a very successful free banking model. And the basic idea is simply that supply and demand for the commodity of money is regulated in the free market, just like every other commodity, such as potatoes, apples, wheat. It's no different. Free market forces dictate the price of money and the supply of money. Whereas in a government monopolistic control, you have, similarly, in any kind of monopolistic control, you have deadweight loss. You have disequilibriums, shocks. Think about rent control. If the government controlled the price of oil, we had non-price rationing. If the government sets the price of money incorrectly, the interest rate, then it exacerbates a boom-bust cycle. After the subsequent development of the Federal Reserve, 1913, 1914, that's when we had the Great Depression that lasted a decade, and the Great Recession in 2008. So arguably, perhaps freedom in the banking system, the most important commodity, money, should be the way. And when you have this idea in people's heads, it doesn't go away. Right now, we start to see the rise of currencies like Bitcoin, virtual currencies, and this is also starting to perpetuate this idea and bringing it back again, that perhaps this government control of money, this monopoly on the most important commodity, is not necessary, and perhaps might be a better alternative. So when the banks, how does this all work? When the banks, everybody says, well, yeah, this is great, but I don't understand it. Okay, this is the way it works. 1800s, people would use money and a bank would back it with the full faith and credit of their credit worthiness. They usually backed it with specie, which is gold or silver. So if you had a $1 note from some bank of New York, let's say, it was backed by gold in their vault. That sounds pretty safe to me. And similarly, insurance companies, railroads would issue money and they would back it by some asset, or they would have bonds or securities deposited in an audible state deposit. And even insurance companies, that's the way they work today with GAAP and stat accounting. They have to deposit securities in audible places where banks, the state checks it. So it's really a state-driven initiative. In 1836, 1837, the state of New York and then Minnesota and other banks, other states subsequently followed that they were going to have a little bit of regulation over the banking system of free money, and it worked very successfully. If anybody tried to issue currency, private people could issue currency, and it wasn't backed by anything, or the people didn't know it or have the full faith and credit of it, then the money would not be worth much and it would eventually go away. There were wildcat banks that did try to scam people, but for the most part, it was a very successful time, and America grew economically in a great way, great stability. And it wasn't until this Federal Reserve that we have things like the Great Depression and the Great Recession. Some people politically argue that the Federal Reserve, the purpose is coupled with the federal income tax. It's a way the government can freely expand the debt, which it has. If they ever wanted to, they could monetize it. They could just print money, get rid of the debt, but we'd have economic collapse. So a lot of governments around the world, we see they simply print more money, and this is the way they solve their problems. It's irresponsible, but a private bank could not do that. They have to back it by something, and people would not use that currency if they didn't back it. Eventually, private banks and free banks started to create, in the 1800s, agreements between each other, and just like writing a check or using a credit card, everybody would accept each other's based on the credit. And that was way back then when we didn't have the internet. We didn't have, consumer checking and people checking on things. So it's pretty effective. And why am I creating this video? Because I think it's a segue into further discussion on these virtual currencies that are rising. And of course, the government doesn't like it. I want to say this is not like anti-government, anti-Federal Reserve. People working in the government and the Federal Reserve are all great people, and they all have good intentions. Or let's say for the most part. It's really about ideas. What is the optimal idea for society? And the idea is, if money is a commodity used for a medium of exchange, just like every other commodity, why should it be regulated so tightly? Why should there be a monopoly on this most critical currency? And you say, well, again, how does this function? How does this make sense? Well, any commodity has value if it has a limited supply, because if it was infinite, like air or water, it will have very little value. Whereas diamonds, as Adam Smith pointed out, is limited, so the value is very high. So that's the first thing. And second thing, it has to have some function. It has to be useful in some way, whether a diamond gives some pleasure on being seen, aesthetic pleasure, or water to be consumed for life. Money's function is to act as a medium of exchange. So if you have these two components, that it's limited, something like Bitcoin's limited, as opposed to the Federal Reserve just continuously creating money, then it's going to hold value. Also, if people generally accept it based on the function, the utility of it, then it's going to hold value. And that was the idea behind free money, free banking in the 1800s. And I believe it's a possibility in the future. Everything is not going to stay the same. Everything is not going to be ceteris paribus just because we were born into a system. The world changes very rapidly. So thank you very much. That's my critique on free banking. Thank you.